She's tired, folks. She's tired. What is going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Happy Friday to all of you out there, and welcome to a brand new episode of Driven here on this January 30th. This is the final trading day of the month, and haven't really done much trading today. Actually had a swim workout for Ironman, followed by a bike. Wrapped up all my workouts for the month. All are complete, and month one is in the books. We're gonna be ramping it up next month, and very excited about that. That's done, and it was a busy month for me. We had the New Year Wealth Accelerator kick off the first week of January, and then from there we were onboarding people for, wow, this dude just ran a stop sign. Did you guys see that? It's crazy. Anyway, I digress. It's amazing some of the stuff you see in a vehicle recording these episodes. But we had the New Year Wealth Accelerator, onboarded everyone. We started the blueprint, so we got the beginner blueprint going on. We got the advanced blueprint going on. We've got coaching going on. So it's just been busy in a highly positive, highly good way. And just want to take a second here real fast. The blueprint members this year, the community members, man, you guys are just knocking it out the park. The engagement, the communication, the sharing of information, the questions, it is a beautiful thing, and I am stoked for 2026 and what is ahead. So now that is all behind us, January is nearly complete. It is time to shift into month number 2 of 2026 and what's ahead. And with the channel, I know with the channel, I've kind of backed off a bit with the amount of content I've put out. And so that will slowly ramp up here in February. Again, it is day trading season. I want to start getting some stuff out about day trading. I have a plan for that. So that will probably kick off Monday. I wanted to start that this week, but again, just finishing everything up. So that will kick off. And just a lot of cool things really about to go down, and I'm excited. And one last thing I'll say before we get into the markets is last year I really started hammering the YouTube channel in April, and by hammering just meaning the amount of content that I put out. So as a little celebration, what I'm going to do is April, it is going to be on. That is going to be the YouTube month. So I got some cool things planned for that. That's coming up, and I'll leave it at that. So the markets, broader markets, like I said at the beginning, man, she's tired. The markets are tired. They really are. We hit 7,000 on the SPX. That was Wednesday, and that was before the Fed rate decision. That was before Powell spoke at 2:30, and that was before Meta, Microsoft, and Tesla earnings, which I thought was a bit strange, uncharacteristic. And then from there, we really chopped during Powell's presser. He didn't say anything out of the ordinary. It really was probably one of the most boring, uneventful pressers that he's ever given. And the price action was pinned during his speech. Now, whenever he finished speaking and then we went into earnings, we saw Microsoft gap down pretty significantly, give back a lot of gains. And we saw Tesla have a modest push higher. And then we saw Meta have a ripper. But that really didn't hold coming into the next day with the positive pushes for Meta and Tesla, because we sold down yesterday, Thursday, about 100 points, and buyers slowly came in and pushed it back up to where the SPX finished down, I think, around 11 points, 9 points or something yesterday. The price action actually broke below that 50-day simple moving average, but there was a rebound. And then today, at the time that I'm recording this, we are down about 50, I think around 56 points on the SPX, and we still have 2 hours and 40 minutes to go. So we'll see if the bulls are going to step back in before this day is over, or if it's going to be a continuation of the selling that we've seen so far today. But just looking at the charts and where we are, if you look at the price action continues to push up, but we're seeing the momentum on the RSI drop. We're seeing bearish volume pick up. But if you really think about it, how far we came since last year's lows in April to now, how can you make a rational argument for this thing to go up? Now, I know markets are irrational, 100%, I get it. And the whole saying that markets can stay irrational longer than you can stay solvent, I'm 100% believer in that. But if you look at it, this thing has to cool off. If it's going to run higher, if there's going to be any more meat left on the bone, the broader markets we're talking, they've got to come down. They're so far extended. And I was just doing a quick look today at the SPX on the weekly time frame. And if you measure out the all-time high that we hit on Wednesday, and you measure out a 10% drop on the weekly, it takes you down to the 50 SMA on the weekly. If you look at 15%, that takes you down to the 100 SMA on the weekly, if I'm recalling correctly. And then if you hit 25%, that takes you a little bit below that 200 SMA on the weekly. So again, I'm throwing these numbers and percentages out there for everyone because eventually that's coming. That correction is coming. And will it be 10%? Will it be 15%? Will it be 20% or more? I think that we're going to get a little mini bear market. It might be something similar to what we saw last year, not going to be long duration. But I do think that weakness is coming because it's constant uncertainty out there. We had a hot PPI report today that came in. Every other day there's some new conflict with another country, and right now there's tension with Venezuela, there's tension brewing with Iran, so you still have that out there. We just had another government shutdown averted, so there's concerns about inflation. We don't know yet if the labor market is recovering. So there's just a lot out there. Then there's the concern that AI is not profitable in terms of all these investments that companies are making, that they're over investing and that they're not going to produce. And so I think that there just has to be a repricing, a revaluing of things, and that's not going to be possible until we get a deeper correction. And in December, I think on the SPX we got down about 7%, which was the deepest pullback that we had in a long period of time. But it's overdue now. Nobody knows when it's coming, but the markets to me right now look sleepy. They look tired. They need a rest. And my target was by middle of February to be flat with a lot of positions, longer term swing trades, and I'm still holding to that. But maybe it's going to come a little sooner than we anticipated because she looks tired, Clark. She looks tired. So, in other news, gold. Just, wow, what a dump on gold today. That was fun to see. All the gold bulls thinking that it was going to go up forever. I mean, that chart was so extended, you knew that had to come back. So gold taking a big dump. Bitcoin is just in its bear market, in a bear phase. Probably has lower to go. Came close to breaking the most recent lows back in November, I believe that was. So there's no bid there. And good old Tom Lee, he was calling for Bitcoin to hit $180,000 at the end of January. That didn't happen, saying Ethereum was going to be, I think, $9,000. That didn't happen either. So those predictions are out the window. And really, Apple had a decent report, but they're concerned about how much memory is going to cost and what the impact is going to be on their revenue as a result of that. But we'll see. I think things are lining up for a winter dip. So that's what I got for you guys. I'll have the Sunday setup coming to you this weekend. And in the meantime, in between time, make it a great day. Honor the moment. And as always, be grateful. I'm grateful for you guys. Take care.